I always say that I'm going to give you guys a warning if something big is brewing. And so here I am. Consider this your official warning. Okay? If the stock markets are going to crash, now is about the time to begin expecting it. Okay? And if you're already subscribed to Havens, thank you for all of those who joined, all of those who subscribed. If you're already subscribed to Havens, you don't have to worry about it. And I'll come to that at the end because what's in Havens is already shielded from this. Okay? Now, I'm going to teach you a little bit about how to read the markets. So people are baffled by the stock markets. Average person baffled by the stock markets. Nobody has ever taught them how to read the markets. This is a skill you only learn in finance if you work at hedge funds, whatnot. So I'm going to talk about micro factors and macro factors and why I think now we've crossed the line to a new level of macro risk. And sometimes I wonder if I should put this stuff more formally to you guys, right? Should I be like, Havens, now the level of macro risk is severe enough that I think a stock market crashes, right? So if you want to read it that way, okay? Now, why do I say this? What happened today that's different? Well, something did happen today that's different. And I'm going to teach you about market microstructure and how to read it, okay? So what happened today, what's different is that the markets closed down. And it's a Friday. They closed down pretty significantly, and it's a Friday. That is a warning sign. It's a big danger signal. It's very unusual, okay? And that timing matters, okay? Markets closing down on a Monday is very different from markets closing down on a Friday. So when markets close down on a Friday, first of all, it's unusual. It doesn't usually happen. And if you look back, right, recent history, even this year, post-Liberation Day, markets close up on Fridays. Now, why is that? Well, it doesn't actually have to do with any economic reasons. It doesn't have to do with even any real financial reasons. This has to do with the reasons of psychology and finance and even lifestyles. And I'm going to teach it to you because it's actually very interesting to understand how markets really work. So what happens on Fridays is that no matter how bad the week has been, generally markets close up, all right? Because there's almost this gentleman's agreement, this tacit agreement in finance, okay? That we're going to let the markets close up on a Friday, so everybody doesn't get too spooked, okay? And the reason and the way this tacit agreement works is this: on Fridays, especially late on Fridays, the bargain hunters emerge, okay? They scour the market for stocks that have, fallen, and so dip buying tends to happen late on Fridays, all right? All through Fridays, but especially late on Fridays. Meanwhile, the big players in the market, the official kind of like Wall Street trading desk guys, have usually clocked out, okay? They're usually on the way to their, beach houses or the racket club or, all these cliches. And so the bargain hunters know that, okay? And so that's why you can find bargains. And so what generally tends to happen on Fridays is that dip buying happens, especially late in the day. And so even if the week has been bad, okay, and even if that Friday has been bad, generally speaking, markets tend to close up, okay? So this is a big danger sign and a warning signal when it's a Friday and the markets close down significantly, especially after, in this situation, right? It's not a normal situation. After weeks and months of stress and distress, in the middle of, right, Trump's ongoing madness, in the middle of these AI jitters, in the middle of American collapse, fascism on the streets, right? All these things have to be factored in. So it's a big deal. What it tells us is that even those dip buyers, those bargain hunters, those bottom feeders, have lost confidence. And even they are not in this game anymore. Even they're walking away because even they're losing their nerve. All right? So when those guys walk away, they were all that stand in between us and a meltdown. Okay? Now, that brings me to the macro factors. All right? And we all know a little bit about the macro factors, but it really goes like this. American stocks are obviously at severe risk. All right, there's AI bubble, right? Techno-fascism, there's Trump, there's this trade war, there's the fact that, the world doesn't really like America anymore. All these things playing a role, okay? So American stocks already at severe risk. And what's happened is that over the last 5-10 years, okay, people in America have got this badly mistaken idea that the stock market is a perpetual money machine. It's a magic money machine. All you have to do is dump some money into the S&P 500 or the NASDAQ or what have you, and bang, you just keep making money, right? And it's not true. It's never been true. Even if you go back in very recent history, there are long periods where stock markets are flat, American stock markets, right? No growth over 5-10 year periods. So this last 5 to 10 year period, because it's been so unusual, so remarkable, has given people the mistaken impression that there's a magic money machine out there. All right? It's a perpetual money machine. Just dump money into it, go up forever. It's never once happened in history, and it's not going to happen this time. All right? So what's beginning to happen is not that people are panicking. Okay? I don't want you to think that. That's the way the media often describes it. That's the wrong way to understand. It's not that people are panicking. Actually, it's that people are coming back to their senses and losing their mistaken, euphoric delusions of a magic money machine, of a perpetual money machine. The stock market can go up forever. Okay? So all that has to happen for a crash to really happen in this situation, in this context, is that people begin to come back to their senses. Panic selling is even a step beyond that. Okay? So all of that is why I say if there's going to be a stock market crash, now is the time to begin expecting it. We just had the last signal that I think we would need, which is markets closing down on a Friday in the middle of this tacit agreement that markets should always close up on a Friday. That tells us that even the dip buyers and bottom feeders and bargain hunters have left the room, and even they are losing confidence. They are the only ones standing in between, right? These macro factors, the world losing confidence in America, the fact that American stocks are severely overvalued, the fact that people have begun to really believe over the last 5-10 years that stocks are a magic money machine, perpetual motion machine, right? All of those, one by one by one, are all danger signals. Today, we had probably the last one. Okay, so that's why I issue this warning today. Now, let me add a caveat. It doesn't mean I'm saying that the market will crash tomorrow. That's not what I'm saying. Nobody can ever say that. All right, and if anybody ever does say that, you should run away screaming. All right, it's a sign that somebody is not being truthful with you. What I am saying is that now we're at severe elevated risk. All right, we crossed a boundary. Risk was high, then it was severe, and now I would say it's as elevated as it almost could get. Right, we can have a couple more layers to this risk, which are already happening. Right, we can have banks in crisis. That's already beginning to happen too. If you're following the financial news, we can have some other wrinkles in the story, right? But risk is now at a level that is severe enough that I think I should warn you, okay? And we never know what the fuse is that ignites a stock market crash. We never know, all right? But we are, I think, now at the point where any little event could be the fuse. That's what I'm saying. Does that make sense? Now, if you're already a Haven subscriber, you don't have to worry about this so much. Haven's already designed to shield and protect you from this. So our equities, our stock market bucket in Havens is already shielded and protected from an American stock market crash as much as I could possibly make it. Okay? So don't worry about this so much. If you're not subscribed to Havens, this isn't a plea to subscribe to Havens. It's not a sales pitch. It never is. If you're not subscribed to Havens, I recommend you have the weekend, right? This could go down on Monday. It could go down on Wednesday. It could go down on Friday. You have the weekend. I recommend getting in touch with your finance guys or your finance team and talking this over with them, okay? This isn't financial advice, right? I'm not your financial advisor. I'm just here to educate and guide and teach you, all right? But I wouldn't recommend to anybody, okay, being in a position to be exposed to this severely elevated risk of a crash. Because now all the signals that I read, right, and don't forget, I've spent a lifetime with this stuff, okay? As an economist, working at hedge funds, running one of the world's biggest companies as chief economist, blah, blah. All the signals that I know how to read tell me that we've crossed every last threshold we need, and any event now could trigger a crash, okay? So get in touch with your guys, talk it over with them, and don't be overexposed to it, okay? So that's a lot. I hope that helped. I'm not trying to scare you, all right? I'm just trying to keep you ahead of the curve, as always, all right? So questions, comments, leave them below, and thanks for listening. I'll talk to you guys soon.